Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets.
Ice raw sugar in New York. Okay, so there is now seemingly one major immediate feature in this market and just one possible feature that may develop. The major immediate feature is what is now the late September to date dark blue bear channel, currently 2053 to 2253, that developed from what was originally a descending wedge pattern. We're also at this time entering and possibly moving below a congestion band between 2140 to 2148, made up of the 50% Fibonacci line of the March 21 to October 23 move and the November 2017 high respectively. The support proved enough over October to hold up the market, but 2 weeks ago it was breached and broken with prices down to the next congestion below between 2084 down to 2069, which is a lot more heavy duty. It did find support down there, being, I suppose, so uncomfortably close to the flatlining gold long moving average, currently at 2044, aided now by the very slowly rising mauve medium moving average, currently 2045. And prices reverted back up as far as the narrow congestion 2235 to 2237, which mainly seems to be working right now on a closing basis. Further up, there is a lesser Fibonacci line at 2299, which was enough to cap the market 3 weeks ago, somewhat surprisingly. Whilst further down, well, there is an argument to consider the whole 2069 to 21 even zone as a single larger congestion band. Now that deals with the immediate future. Now to the possibility, and that is to look at the whole September to date action as either a topping action with potential back down to the 19 even cent zone, or as a potential bullish halfway hesitation with potential up as high as a possibly 26 cents. As I already mentioned, this is all just a possibility right now, and I would rather require further study of the market actions, but I do wish to make sure that you are aware of these possibilities rather than get surprised by them at the last moment. So for the moment, we are still within the dark blue bear channel, but just be aware of those. Ice Europe white sugar in London. From the lopsided island top formed over late September, this market has been gradually moving sideways to a little lower, and in the process getting itself trapped between three moving averages until 2 weeks ago, when it looked like it was escaping before seemingly getting itself trapped again in amongst those moving averages. So on the top side is the gold long moving average, currently at 569, that has been assisted at a distance by the dark blue upper trend line extension and downtrend, currently at 587.10, and that's of the January to September this year descending triangle, as well as in the past by the 50% Fibonacci line of the July 21 to November 23 move of 592.80. Then we had seen the support sort of from the green short medium moving average, currently at 564 even, but this proved to be a mirage, and this moving average is acting more as a nuisance than either as a support or a resistance at the moment. Finally, we have the flatlining mauve medium moving average below, currently at 549.60, along with the March 2017 high of 548.70 and a lesser Fibonacci line of 550.20. These three worked together until 2 weeks ago when prices sallied lower but were quickly turned back higher by a bullish hammer 2 Wednesdays ago, and with changeover as well. So we have ended up back within the nest of the moving averages, with a slowly declining gold long moving average overhead, and today the mauve medium moving average, previously breached but seemingly repaired, acting as support along with the March 2017 low and a lesser Fibonacci line. Now, we do still have a small gap left over from 2 weekends ago, but it hasn't yet been completely filled in, and that's between 548.5 and 549.20. But we are very close to doing so, though I think the overall picture is the same as I said 2 weeks ago, and I quote, "In the meantime, until we break one or one way or another, the market seems capped by that gold long moving average overhead and supported by the mauve medium moving average below. And I think that's the end of the quote. And I think that still is the case now. I'm still waiting to see which way it moves before I can actually make an assertion of how long it will be. Sugar white premium spread, and this is actually quite a long commentary. The market made a huge combined weekly key reversal down and bearish engulfing pattern. That's 30 weeks ago. I suspect this was in large part due to London Sugar Month changeovers, but it nevertheless was a seminal moment and set in motion a lower market, though prices took their own sweet time in getting down there. Between mid-July to mid-September, the market had been testing the lows of early to mid-October last year, down in the 115 3/4 to 116 zone. I also noted many times that though we had been held up in that region for a while, this support may not have been as strong at that time as seen back in October 2023, and this proved to be the case. 11 weeks ago, I highlighted the significant weekly pattern, an immediate countering key reversal down and bearish engulfing pattern, punching down through the 115 3/4 to 116 zone, and then down through the next congestion zone below, made up of lesser Fibonacci lines at 107 3/4 and 104 1/2. I spoke 11 weeks ago about the supports below, and I quote, "These are lesser Fibonacci lines further down at 107 3/4 and 104 1/2, but I am not sure how good these are." The next support note would be the lows of the first week of February 2023 at 83 even, the mid-February low at 83 3/4, and the early February low at 81 3/4. And that's the end of the quote. Now, I continued further, and it is an important piece I dealt with, and I quote, "The only other feature to consider is a new one I've drawn on my weekly chart, which is not as yet established, but which deserves consideration. It is the April to date descending wedge pattern, currently 75 even to 104, and it's highlighted in dark blue on my daily chart. This is still a nascent pattern, but one worth watching," end of quote. 9 weeks ago, the prices breached and closed below this pattern, and it was no longer a nascent pattern, but the main pattern. I add the following 10 weeks ago, and I quote, "The key feature to watch for, apart from the obvious break out of the descending wedge pattern itself, is when the lower trend line crosses the purple neckline extension to the significant February to September 2020 head and shoulders top, currently at 77 even. This will be approximately during the week ending the 22nd of November this year," end of quote. Well, we had that week last week, right after a big move lower 2 weeks ago from an immediate countering weekly key reversal down and bearish engulfing pattern. And we broke down below the purple neckline and the November 2021 low at 68 even, and reached down to the primary target X on the downside at 65 1/4. I will detail target X shortly, but I'd first like to address last week's reactionary move back up over the purple neckline, the dark blue lower trend line, and the green short medium moving average, currently at 81 even, though we did not close over this last one, the green short medium moving average. However, as I said last week, and I quote, "I am not convinced of the pressure behind this bullish move, but as I said last week," so that is now 2 weeks ago, and I quote, "It is very, very precarious, especially today," end of quote. Now, with this move higher, we ended up with a possible 2 week long separating lines pattern, typically seen as a bullish pattern. So I'll be watching the action around the green short medium moving average especially closely. So what have we in the way of opportunities and barriers on the downside and the top side? I'll try and keep it simple and short, as the much larger picture has even made me somewhat scared. So below the dark blue lower trend line, obviously look again at the November 2021 low at 68 even, and then at the congestion zone between 45 even up to 55 even, dating from July to September 2021. In the bigger picture, well, I'd previously looked for opportunities presented by the break below the descending wedge pattern. The primary target is in the 65 1/4 zone, just below the November 2021 low, has been reached. However, the secondary much harder to reach target X1, well, that is quite a long way lower, way down in the 1 even zone. Yes, 1 even. And this has gotten me somewhat scared. as this is below what I know to be the prior lows here, notably my 2009 low at 22.25. All this is without even considering the implications that just possibly the move lower may have triggered targets, finally, for the huge 2022 to 2023 diamond top pattern. And on that, well, I shudder at the thought of it, but I'll leave it for the moment. Meanwhile, topside, well, we have fib congestion at 104.25 and 107.75, but we also have a changeover gap from September this year between 109.25 up to down to 100. And though it is a changeover gap, it still deserves consideration should prices try this high. Just be aware that up there we have the upper trend line, the downtrend of the dark blue descending wedge pattern. That's currently 105.5, and its seeming constant companion, the medium moving average, currently 106 even.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.